Transportation stocks are well positioned to benefit from the rapidly growing American economy and other positive catalysts. Wabtec. Wabtec is poised to get a lift from the quickly increasing utilization of rail. Canadian Pacific Kansas City. Canadian Pacific Kansas City will likely benefit from elevated oil prices. J.B. Hunt. Analysts expect J.B. Hunt's profits to surge in 2024. Let's dive in. Road to riches. Here are the 3 transportation stocks set to outpace the market. Welcome to Timely Investment Research. Transportation stocks are typically viewed as moving in sync with the economy as a whole. Despite what the very stubborn bears say, I would argue that this characteristic makes transportation stocks very attractive at the current time, as the Fed projects that the U.S. economy will grow at an extremely rapid 4.9% in the current quarter. One of my favorite expressions is "don't fight the Fed's GDP projections." Moreover, as you'll hear later, while some transportation stocks will, of course, be hurt by high oil prices, other names will be helped by the phenomenon. Also noteworthy is that a meaningful portion of transportation companies will be boosted by Washington's current initiatives, while many names in the sector are extremely undervalued. Here are 3 very well-positioned, inexpensive transportation stocks to buy for medium-term and long-term investors. Number 1. Wabtec. Wabtec provides locomotives, along with many other parts for trains. The company says that it sells products to almost every major rail transit system in the world. With oil prices high, many countries are likely to expand their use of both passenger and freight trains. That trend will, of course, be positive for Wabtec and Wabtec stock. Additionally, with a multitude of governments mandating that many more electric vehicles be sold, the utilization of passenger trains is likely to jump, since EVs tend to be quite expensive and many consumers will not be able to afford them. Further, Congress approved $66 billion of new funding for trains within the bipartisan infrastructure law. Wabtec has historically won major deals from contractors that serve Amtrak, so Wabtec is likely to benefit from the funding. Another one of Wabtec's U.S. partners, Brightline, a private company, is building a new train line connecting Las Vegas to Southern California and is likely to benefit from the bipartisan infrastructure law. Finally, Barron expects Wabtec to sell more safety equipment in the wake of the tragic derailment of a train in Ohio in February. Number 2. Canadian Pacific Kansas City. Citi recently started coverage of railroad operator Canadian Pacific Kansas City with a buy equivalent rating and a $90 price target. The bank contends that Canadian Pacific Kansas City is uniquely positioned for growth over the long term, with competitive access to key markets in both Canada and the U.S., including ports on both the East and West Coast. Moreover, the firm thinks that Canadian Pacific Kansas City's upcoming merger with Kansas Southern will boost the company's network and enable it to reduce its costs. Canadian Pacific Kansas City will also likely be helped by higher oil prices, as the latter phenomenon tends to significantly boost the Canadian economy, given the country's big oil drilling business. Analysts, on average, expect Canadian Pacific Kansas City's earnings per share to climb to $3.47 next year from $2.67 in 2022. Canadian Pacific Kansas City stock is changing hands at a reasonable forward price-earnings ratio of 21.5. Number 3. J.B. Hunt Transport. Trucking company J.B. Hunt recently predicted that it could increase the number of containers that it hauls by as many as 150,000 containers by 2027. The company also expects to benefit from cost-cutting and increased demand for its intermodal services. The demand for intermodal, which accounts for 48% of J.B. Hunt's revenue, should be strong since it uses much less fuel than trucks. Further, I believe that the firm, like all trucking companies, is well-positioned to benefit from the current rebound of the e-commerce sector. Analysts, on average, expect J.B. Hunt's earnings per share to climb to $9.06 in 2024 from $7.70 in 2023. The shares are changing hands at a reasonable forward price-earnings ratio of 20.7. Thanks for spending some time with us today, Timely Investment Research. We're so glad you did. If you found value in today's video, please give us a like, hit that bell icon to never miss an upload, and hey, don't forget to subscribe.